What is up, everybody? Welcome back to another episode of Bitcoin and Markets. Happy Monday. Hope you are all doing well. It is Fundamental Report Day. So every Monday, I put out a free newsletter for Bitcoin and macro. It's called the Bitcoin Fundamentals Report. And every Monday, then I read through it here on the live stream. So that's what I'm going to do today. Let me share my screen real quick with Telegram. I'm going out on Telegram and YouTube today because Rumble is not working. They are down. I'll share this one. So yeah, Rumble is down hard. It's been down for like 3 hours. Alex Jones, I guess, was going on there, and now it's having some DDoS problems. So I'm not going out on YouTube or on Rumble, but I usually do. You can find me on YouTube. Sometimes I go out on Twitter as well. And of course, Telegram is my home base for all the community stuff. So check out t.me/Bitcoin and markets. Let's share the screen and go right into the report. So bitcoinandmarkets.com, you get all my free content there. Members also get member content. So check out the different tiers if you'd like to support. I'm also putting this stuff out on Substack. It's usually about 12 hours later that it goes out on Substack. And you can also join monetarily there as well. Okay, let's go to this report. So first meme of the day or of the week, I always start off with a meme. Jamie Dimon was in front of Congress on Thursday or Friday, and he said Bitcoin is just for criminals. And of course, everybody looked up in his past comments about Bitcoin, and we found out that his daughter owns 2 Bitcoins. So he is implicating his daughter in international drug cartels and human trafficking, terrorist financing, and criminal gangs. He is doing that to his own daughter, which I think is pretty low. And of course, we all know that it's just complete lies anyway, that Bitcoin is just for criminals. It's like 1/10 of 1% that goes to any illicit activity anyway. All right. So snapshot of Bitcoin. Weekly trend. Price has stalled. When I was writing this, it was interesting because last week price was about 42,200, I believe. We'll see in the price section down below. It was 42,200. And at the time of writing the price section this week, it was once again at 42,200. So price has stalled. There is a bit of a correction going on. We will cover that down in the price section. Media sentiment is neutral because of all of this Elizabeth Warren stuff. We will cover that down below as well. Network traffic is very high. Another high week for the mempool. It keeps increasing. However, the fees aren't really going up all that much right now. So that's it. The network is at least keeping up with the most urgent transactions. So that's a good thing. Mining industry is still growing rapidly. Days until halving is 128. Weekly price. When I wrote the table, because I always do the table at the end, the snapshot, it had dropped down to 41,195. That is $700 down on the week, or almost 2%. Market cap also down, of course, on the week, $802 billion. Satoshis per dollar, 24.39. One Finny, that's my preferred metric of Bitcoin, which is 1/10,000th of a Bitcoin. It's sitting at $4.10. Previous difficulty adjustment was this weekend. I believe it was Saturday, and it was almost negative 1% at 0.95. The estimated adjustment, the next estimated adjustment is negative. We're still 12 days out, and the website that I use for that, which is, I'll just share it with you guys. It is newhedge.io. This guy has been doing this for a long time on other websites, and he, I don't know if his page got acquired or his code got acquired or whatever, but he's switched websites several times. But this is a really good estimator, and so you can see it's estimated for about negative a quarter point to just over negative 1%. We will see how that develops as we go. Let me go back to the newsletter. Mempool was, I believe it was 330 megabytes last week, and it's now up to almost 350 megabytes. Fees for the next block, though, are holding steady under $5, $4.76. When I pulled this, that's 83 sats per virtual byte. A low priority fee, so that's to get to the next block in 10 minutes. Low priority fee is the same because all of those high fee transactions are getting mined relatively quickly. They're not adding up into the mempool. We'll take a look at that chart here in a minute. But even for, say that if you want to just get it in the next 6 blocks, it's going to be the same price as if you're trying to get it in the next block. Okay, Lightning capacity is down 0.2% to 5,079, and channels are down 0.6% down to 59,000. Broke that 60,000 barrier that it had been kind of maintaining for a long time. When I started doing this, it was probably up at 70 to 75,000 channels, and it just keeps dropping over the months. Of course, high fees on chain do not benefit opening of channels and all that. So you can see how maybe that can affect these numbers. But Lightning is, man, I really want it to succeed. It's just kind of blah. There's no adoption of Lightning really at all. It's still a niche thing. And of course, maybe gradually it keeps getting better. So gradually it will catch on, they'll find some niche and it will explode. But right now, that seems to be a long way off. I did report on the Lightning version 2 that people have been working on for a couple years. That's about to be fully implemented. So when that gets fully implemented, perhaps that streamlines the process a little bit more, or at least allows for the process to be streamlined a little bit more, and people can start using it. But especially in a bull market, people's attention is not towards transactions or spending of $5, $10 worth of Bitcoin. People's attention is on acquiring and holding, especially in the bull market. When we get to the top of the bull market, then people will be much more flush. They'll have this wealth effect, and perhaps they will start spending it more. And then that will be when Lightning channels and capacity pick up. But that remains to be seen. All right. Next section. In case you missed it, this is where I put out all my stuff. I'm actually going to start linking to all my live streams because the podcast has just kind of petered out. I would take these live streams, edit them a little bit, and put them out as a podcast. But that process gets out of hand, and I don't have enough time to do that. So maybe I'll just start linking to all the live streams. If you're watching on YouTube, like, comment, subscribe. I'll check out the comments after this. And Telegram, you guys can do it in the post for today's stream. Okay, blog. No new blog post out this week, but I did write a bunch of stuff for Bitcoin Magazine Pro. This was a tough week with them because we restarted these dashboards. So they have these 2 dashboards that Dylan and Sam started over there, a markets dashboard and a mining dashboard, but they hadn't been updated for a few months. And so I'm revamping those and getting those restarted. And so this week, last week, that took a lot of my time. That took 2 full days out of my week to get those up and going and get real comfortable with the process. So those will be coming out every week, a markets dashboard and a mining dashboard on bmpro.substack.com. That's Bitcoin Magazine Pro's kind of premier newsletter. And they're great, man. The markets dashboard is really, really cool. The mining dashboard is also very cool, but it takes it more from an investment standpoint, like more from like if you're buying the Bitcoin miners, like the stocks or whatever, it tracks all of their numbers. It's also a very good dashboard, but it is slightly tuned, more towards the stock side of the Bitcoin space. And I did write one piece for them. Are the Bitcoin ETFs priced in? We talked about that topic a little bit last week as well. Okay, let's get into the headlines. So ETF news, and remember, these are headlines for the last week because every Monday I come out and I drop the summary of the last full week and we can start a week fresh. So anyway, ETF news continues to march forward. This week we got news that applicants continue to meet steadily with the SEC, working through minor paperwork issues and some compliance stuff. I saw one that was talking about there's a chance that there could be Bitcoin regulation in the future and the government could start trying to ban it. So they're having to add a lot of this just boilerplate investor protection CYA stuff into their filings. It doesn't mean that they expect that there's going to be some regulation, but the SEC is like, we need to cross every T and dot every I. So we have to put all of this language into these things. So that's what they're working on. They're working through these kind of minor issues. And that's where we're at with this. SEC is reportedly working late to get these things buttoned up as tight as possible. In kind versus cash creates. You guys know we've talked about that a lot. In kind is when the individual brokers go buy Bitcoin and approach the ETF with the Bitcoin. And then those Bitcoins are turned into shares, and then they hold the shares for their clients or whatever. That distributes the buying pressure. But cash creates, what that does is those brokers with their wealthy clients, they will come to the ETF with cash. They'll buy shares. Then the ETF, or BlackRock, Fidelity, whoever, they go out and buy the Bitcoin themselves. That is centralizing buy pressure, right? Yeah, onto these certain companies. You can see why the SEC would want that. They want to have more centralized buying so that they can watch them, so they can regulate them, so they can keep control of it. Where the in-kind creates is a little bit more distributed buy pressure, and also it's better for taxes, and it streamlines a lot of the paperwork, I guess. So several of these ETFs, they want to go with in-kind creates, but the SEC wants cash creates. That's back and forth. I say that in-kind creates versus cash creates is still a sticking point, but not one that will hold up launching. BlackRock and others will have either or options. Sorry, that was a bad sentence. BlackRock and others will have either or options. So yeah, they will have two things ready to go. They will be able to do cash creates if they must by the SEC. But they want to continue to try to educate, continue to try to push the SEC towards in-kind creates. While they prefer in-kind creates, they will likely settle for cash creates, at least for the time being. So yeah, they're not going to say, oh, we're not going to launch because you won't let us do in-kind creates. They're going to launch, then they're going to work on it down the road to try to get what they want with the in-kind creates. We'll see how that goes. Tickers are being assigned by the DTCC, the back end of the stock market. BlackRock is IBTC to go along with their iShares brand. Fidelity is FBTC, and VanEck has filed for HODL, which of course they're the true Bitcoiners there. Probabilities remain high for approval, but I did walk through what the real battle is several times on the live streams now. So yeah, last week I walked through this, and I tried to tighten it up and make it very concise here. So this is what I think is going on. The globalists, represented by Senator Warren and the administration, want to deny and regulate hard, then launch a CBDC. Deny the ETFs, regulate Bitcoin real hard, and launch their own CBDC. That's what Warren wants. That's what the administration wants. And globalists around the world, like the ECB and the EU, they want this too. So that's one side. Wall Street is the other side, and they're represented by BlackRock and the Fed. They want to push ahead with Bitcoin against the globalist plans to march us into a Marxist death cult. So Wall Street is trying not to go down the road anymore towards the Marxist globalist future. COVID scared the crap out of them. They realized what was going on. And now I think that Wall Street has the moneyed interests in the US and maybe elsewhere too. They have totally shifted and they're going towards it. And this also makes sense too, because this is an internal kind of battle. In the West, right? The globalists versus the moneyed interests. The Marxists versus the capitalists. But places like Saudi Arabia and the UAE and Qatar, they're kind of outside. Obviously, they're outside the West, but they are more friendly to Bitcoin and in the past to blockchain and all this stuff. They're mining there now, So like they are kind of outside of this. And that's why we tend to see some of these marginal countries that aren't in this death battle between Marxists and capitalists. They seem to be more agile, they're more nimble, they can adapt much faster because there is this big clash here in the West and the US in particular. So I say Gensler as a person is part of the latter, but his role at the SEC is part of the former. So he is right in the middle. He is at his heart part of Wall Street and he's capitalist, but he works for the SEC. So he is right in the middle of this. Okay. Let's go on to the next story. Jamie Dimon and Elizabeth Warren team up to FUD Bitcoin. There was nothing new in their FUD. Senator Warren used this false claim that Bitcoin is used for terrorist financing, and Jamie Dimon, CEO of JP Morgan, claimed it was only used for crime. We've heard these lines for years when Bitcoin was much smaller and less entrenched. It didn't work then. It won't work now. There is no way BlackRock is going to be filing for an ETF and these goons will get some draconian regulation passed through Congress. So that goes towards the Senator Warren thing that just came out. So BlackRock is filing for an ETF. They're pushing forward with this. What's the likelihood that Elizabeth Warren's bill will get passed? Very, very low. And I saw another stat, and I'll just bring up that tweet now. So this is from Julian Farrer, and he says, reminder that Elizabeth Warren is one of the worst legislators of all time. Her lifetime stats are 305 bills introduced, 0 became law. She is co-sponsored 1,766 bills, and 45 of those have become law. She's just an in real life engagement bait troll. And I agree with that. She's also a globalist and she's pushing, it's the action reaction. These people have action reaction. So the Marxists, their kind of tool is they might push for something real hard. Okay. Like the 2030 climate objectives. They're pushing for these things real hard. And their goal isn't necessarily to get those 100% as they want them. It's to move the needle. It's the what's the term for it? The Hegelian dialectic, right? It's the what's the term? Something synthesis, right? I can't remember what it is now. But anyway, that's their plan. Their plan is not what they offer. Their plan is halfway step. So that's what she does. Her plan with all these bills that she's introduced, 305, it's not to get those bills actually passed. It's to move the conversation in that direction, to open the Overton window towards that. So anyway, just thought I'd add that. Okay, let's go back to the report. And I say the best they can hope for is to get a globalist stooge as Fed chairman and recalibrate the domestic banking rules against Bitcoin. Wall Street unofficially picks the chair, the Fed chairman, for the president. So the Wall Street nominates this guy for the president, or gal. Has never been. Oh yeah, it has. Yellen nominates this person for chairman, and the president accepts that, and then the Senate has to confirm that person. So I think there is little chance Wall Street will give up that power. Short of that, they can try to bend the existing laws and statutes to include Bitcoin in a nefarious way. But that is also a long shot, in my opinion. I say Elizabeth Warren is trying this right now because I was almost done writing this and this news dropped so that I included it. She's targeting self-custody mainly with this one. All timed to try and squeeze an ounce of attention out of it. So obviously here, let me go through this. So they were talking in Congress. Jamie Dimon was saying this just for criminals. And then she gets interviewed by CNBC and talks about how it's used by criminals and for terrorist financing and everything. And this was just last Friday that all this went down. And then now today she drops this bill. So this is just like that Julian was saying, this is engagement farming, trying to squeeze some attention out of this. But it didn't work when Bitcoin was small. Bitcoin is way bigger with entrenched interests now. BlackRock, there's, what is it? $15 trillion of assets under management from these applicants. They're trying to launch a Bitcoin ETF. It's too big for this type of stuff to work. So I'm not even worried about it in the least. All right. Next story is going into macro here. So on my newsletters and my live streams, excuse me, I go deep into macro, and I've been making some really great calls over the last several years, directionally correct. And that is hard to say when most macro analysts out there, they're just pumping fear, doom sells, right? If it bleeds, it leads. Doom sells. And so a lot of these macro analysts, I don't know if they're not being honest, because they might just not understand it, but it's possible that they do understand it, but they're just selling you fear. I don't do that in my content. That's why I can be directionally correct. They could probably be directionally correct too, but they just sell doom. That's what Jeff Schneider was engaging with some trolls on Twitter the other day, and they were calling him out for his thumbnails on YouTube and saying, "Oh, look at all these thumbnails. It's all just, everything's bear this, bear that. Everything's going down. The recession is around the corner." I think Jeff is aware that, he's smarter on a lot of this stuff than I am, of course. And he knows that it's not like imminent, but they put that on all their stuff. So they're selling doom as well. And he said in his response, like, no one's going to click on your videos if you don't sell a little fear. And I get that. I mean, that's why my videos probably don't get clicked on it very much at all. But at least I can be honest with what I'm selling. I've never sold a scam on the podcast going back to 2016, when people were throwing $100,000 at you to promote their scams back during the ICO craze and all that. So never sold a scam, never pumped anything, very rarely talk about altcoins, if just to mainly talk negatively about them. So yeah, that's my style, is just very honest, directionally correct on pretty much everything. So, okay, enough of that. CPI is coming out tomorrow. October CPI release was pretty dramatic, and I have this image here so you can see the October CPI shock. There was a huge gap up in the market. It came in at 0% month over month. Then we found some resistance around this high close from back in July. But we just broke through that, and we have CPI coming out tomorrow, and there's a possibility that it will be negative month over month. This is a real possibility. Let me bring up the Cleveland Fed. So the Cleveland Fed, they do this inflation nowcast, and they have November estimated at negative. Of course, it's just negative 1 basis point, but it is negative nonetheless. And they are constantly missing too. So let's go through this real quick. Interesting website. You guys should check it out. Okay, so let's go to, I think there was one that was really big miss. Here's a really big miss. So this is for July, released in August, right? And they were estimating CPI way up here at 0.4. And where did it come in? It came in way down here. There it is. Come on. At 0.16. This site is constantly overestimating. We can go through most of the months since that time. Okay, so here they were a little bit under. Where are we going here? Let's go to September. September, the core was a little bit high, but they were pretty good on that. Let me go to November. Oh, we can't see that because that's not released. So let's go backwards to, here is May. They overestimated. I went through this and looked at every one of these for like the last 12 months, and they averaged being 0.25, I think it was, above where the CPI actually came in. So they're estimating inflation high every single time. So here's another one in April. And let's go to March. Big miss here in March. So March came in at 0.05, and they were estimating all the way up here at 0.3. Now that's a 0.25 variance there, but it's worse than that because it's like, what would that be? That is 400%. Am I doing that public math right? 400% miss from the actual to the estimate. So yeah, this is not that good. So now let's go back to what they're estimating here for November, and you can see that they're estimating negative. So let's say they're overestimating this again. Okay, they're overestimating this by 0.2. What if CPI comes in seriously at negative 0.1 or negative 0.2? The market is going to freak out, just like it did last month. So let's go back to the report and bring this chart up again. So that's what I'm saying here. With the resistance broken, it's looking like it's about to pump. CPI is coming out tomorrow, just like here back in October. And if we get a negative surprise, man, this could really jump. This could jump. I mean, I think it's still maybe 5 or 6% from all-time highs, but it could jump 2-3% in a day easily. And what's this correlated with Bitcoin? Bitcoin didn't react very much back in the October shock, but it could react this time. Okay. So I will be live streaming that. It's tomorrow morning at 8:30. So join me on, hopefully Rumble's back up. Join me on YouTube, Rumble, or Telegram. Okay, next story. The Houthi, I don't know how to pronounce it. I think it's Houthi. Houthis blockade Israel shipping in the Red Sea. So the Red Sea is heating up, and I talked about this last week as well. The Houthis claim they will stop all ships going to Israel, and this is a legit video from a spokesman of the Houthi rebels. They're not rebels, though, actually. They are the ruling government of Yemen right now. So, but anyway, so they're going to attack all ships heading for or departing Israeli ports. This is a huge deal, guys. A huge deal. Quoting from the article, Yemen's Houthi movement said on Saturday, this should be government because they are the actual government, and they were taken off the terror list, the terror watch list or whatever of terrorist organizations. They were taken off, and they're the ruling government of Yemen. They are terrorists, but that's beside the point. Said on Saturday they would target all ships heading to Israel, regardless of their nationality, and warned all international shipping companies against dealing with Israeli ports. And how are they doing this? Well, they're launching drones. They've also launched ballistic missiles, or not ballistic missiles, but anti-ship missiles. So they're going after these guys hard. Another update from the Red Sea. So a French warship shoots down 2 drones coming from Yemen. A French warship operating in the Red Sea has shot down 2 drones that were launched at it from the Yemen coast, the defense ministry said on Sunday. This is a big escalation because most of the traffic going through the Red Sea to the Suez Canal are headed to Europe. So the Europeans have a big interest in protecting the shipping lane. Much bigger interest than the US at this point. And the French are there. And they're getting shot at. This is a big escalation. Okay, so this shows that other countries are going to start bearing more cost for securing global sea lanes. If they are increasing their involvement, they need the U.S. less as policemen, allowing the U.S. to continue withdrawing from that role. And that's part of my geopolitical analysis is I think the U.S. is going to give up some of this mantle of being the global policeman. They're going to pull back, and the costs are going to be borne more by those individual countries. And when the global policeman goes away, which of course I don't agree with everything that the global policeman has done over the last decades, but these countries are going to find out what it's like to not have a global policeman. The Houthis are going to be firing at you guys. The Pakistanis are going to be having a civil war. Russia's going to invade Ukraine. All of this is due to the role of as global policemen is weakening for the United States. Partly it's due to financing concerns. We are tired. We have what's it called? War fatigue. The country doesn't want to be the global policeman anymore. But also it's just natural. There's a natural ebb and flow to these things, and the US is withdrawing. So, yeah, they're going to get more involved in securing the global sea lanes. They're going to have to pay for it. And guess what? The US, people are going to want the US to come back. That's what I think. So anyway, okay, next story. Fed's reverse repo total is crashing. Most people don't understand what's going on here. What reverse repo represented was banks' deposits not being lent out into the economy, but squirreled away into the RRP. So I'll read that one more time. What this reverse repo represented was bank deposits not being lent out into the economy, but squirreled away into the reverse repo. However, now those depositors, high net worth individuals and pools of capital, are getting defensive. They don't want to keep their deposits in the bank. They want to buy treasuries. They want to put it into money market funds. They want to get defensive. So those deposits are being withdrawn from the banks, and the banks don't have them to go into reverse repo anymore. That's why this is all draining. So let me open this up. I just think this is fascinating. At the end of every quarter, you see a spike. Not every quarter, obviously, but every spike, you almost 100% matches with the end of a quarter, which I think is interesting. RRP total is crashing as deposits flee into money market funds and treasuries. So I read a take that once this runs out, there will be no one left to buy treasuries, implying that yields will go back up to new highs. That's exactly the opposite of what's going on. As these excess deposits disappear, it will put increasing pressure on banks' balance sheets, causing more and more money to flee to the safety of the treasuries. So as balance sheets become precarious in the banks, the situation adds more pressure towards treasuries. So these are already going into treasuries. But the banks having problems puts even more pressure that way. So this level is not available money, which is what some of these takes are saying, that this is available money to buy treasuries. So they're buying treasuries right now. But this level should not be thought of as available money. It should be viewed as market sentiment. As it drains, the market is getting increasingly worried and paranoid about crisis. What happens then? Freezing the bank plumbing and financial crisis. So that's what's my explanation for the reverse repo. Okay, let's go on to Bitcoin price, guys. Bitcoin price, we have this dip, and I put on the thumbnail actually for today that this dip is temporary. So let's go through what I'm seeing for the price of Bitcoin. So last week I said the probabilities favor price continuing higher over the next week and then softening around the middle of the month. Price did continue slightly higher last week from 41,200. Oh, it was 41,000. I thought it was 42,000, but 41,200 at the time of writing last week. It hovered around 44,000 for much of the week. And now it has sold off 5% this morning, right back to 41,200. So let me open this up. If you can see my cursor, right as it was breaking out of this channel is when last week's issue came out. So right about the same place as it is now. It's a round trip. And we're getting towards the middle of the month. Today's the 11th, and it's kind of a shortened month because of the holidays. So this is pretty much the middle of the month. And that is what I said, that we softening around the middle of the month. That's what I said last week. Okay, so I'm a bit surprised that price didn't stretch for 48,000 before the mid-month weakness, but that could result in a sooner bounce, perhaps even by the end of the week. Price is now being supported a little by the top of the channel and the round number of 40,000. Below that is the prior resistance at 37,800 and the rapidly rising 50-day moving average. I did make my prediction for the mid-month weakness on last Friday's Proton for professional tier members. So let's check this out again. We have the 50-day moving average going up, about ready to cross this previous resistance at 37,800 that almost the entire month of November, that was resistance for the price. So that should be pretty solid support if it gets down there. And the 50-day is coming up. So that's some consolidation of different support levels right there. You also have to break through the round number of 40 and go all the way through the channel. So there's quite a bit of support here to support the price. And actually, as I'm talking about this, let's go look at a live chart. So I'll share this right here. So it has sold off a little bit more since time of writing, 40,767. Let's take a look at CME. It is sitting at 40,900. So only $200 difference. It was as high as $600 for several weeks, but now it's down to only $200 premium on the CME. And I did mark out this 44,100 is now the high close. So that is the next line of resistance if we can get up there. Perhaps we bounce off this bottom line and go back up to 44. But that is the live chart. Okay, let's go back to see. Price is now being supported a little bit. I talked about that. I'm expecting some volatility around the CPI release tomorrow. Last month, stocks jumped, but Bitcoin didn't really react much. Actually, let's go back. Let's look at, it was like November 14th. So this is the reaction to last month's CPI. So it went from the bottom of the channel to the top of the channel. So that was a significant reaction, but it wasn't a gap higher or anything like that, like I showed you on the stock market. So and we stayed within the channel, sold off the next day. So that really wasn't a super big effect on Bitcoin. But we could see a retracement of this entire candle tomorrow. That's possible. All right. Going back to report. If the same thing happens this month, it will add support to wherever Bitcoin happens to be at 830. So if we get a surprise to the downside, okay, and let's say price is right at 40,000. Let's make this a big red line. Say price is right around 40,000 at 8:30 tomorrow morning, and we get a surprise, a negative print on CPI. Wherever Bitcoin is at that time is where there is going to be support added there, because there's going to be pressure for Bitcoin to rise. And why is that? Well, people think that if inflation is tamed, we're that much closer to the Fed lowering interest rates and going back to QE, which is actually the case. We are closer to that. I don't really want to go into that completely right now, but that's what people are thinking. Of course, that's not the case. We're going into recession, and Bitcoin is a safe haven. That's why Bitcoin will rise in that time. But intraday market movements can be driven by news. Okay, let's go back to the report. Forecasters must take into account two big events making it hard to predict price right now: the ETF approval window, January 8 through 10, and the halving on approximately April 17th. This current dip is tiny in the grand scheme of those two events. What I'm focused on is watching the price react to support over the next few days while in this mild correction. All right, so that is it for price. Let's go on to Bitcoin mining. If you guys are enjoying this, like, comment, subscribe down below. I'll take a look at the comments before we end the day here. As well on Telegram, I'll take a look at the Telegram post. If you make a comment under there, I'll check that out. Okay. So headlines for Bitcoin mining. Bitcoin halving is poised to unleash Darwinism on miners. And this is an archive link from CoinDesk. We're starting to see some FUD about the halving. So Darwinism could soon pummel some Bitcoin miners as the halving, a once in every 4-year event that cuts the reward for creating new Bitcoin, gets cut by 50%, unleashes a survival of the fittest battle in April. I say, the fact is, there are many more miners today after several halvings than in the past. So the halving will hurt some miners, but very minimally. Price will increase, offsetting the reduction in reward. So we can take a look at the chart, or you guys can take a look at the chart. The worst times for miners are the bottoms in the price, not the halvings. The halvings don't occur at the bottom. The halvings occur after the bottom, and maybe about 100% move, or even sometimes 200% move in the price of Bitcoin. So the bottom is the thing in the price. That's the thing that squeezes miners. That is the evolutionary effect, is the bottom of the price. Okay. The article goes into that respect a little bit, but glosses over the real Darwinian period of the depth of the bear market. Prior to each halving, the price more than doubles off the bottom. Lastly, the article talks about cash-heavy Bitcoin miners right now. They are sitting on hundreds of millions of dollars. So both in actual cash, but also in Bitcoin. Their miners are holding a lot of Bitcoin. And so the article goes in saying that, hey, they're looking to acquire these struggling companies, that the Darwinian evolution is going in there and making them unprofitable. And so they can be scooped up on the cheap by these big guys that are holding a lot of Bitcoin. That requires them to actually be hurting when the price is doubling and tripling. And I don't think that's going to be the case. If I'm correct, and the price will more than compensate for the lower reward, the cash miners are sitting on can be used to hold more of what they mine, kicking the deflationary feedback loop into effect even more. So yeah, they'll just hold on, and maybe they'll continue to add hash rate by buying miners, direct out of the chip fabs and all that, and just being able to hold more Bitcoin, and that will kick that supply. If they are going in there and spending their Bitcoin, the struggling miners, because their balance sheet, a lot of that cash and cash equivalent stuff is by these miners is being held in Bitcoin. So if they go out there and they spend that Bitcoin, those bankrupt, people, the bankrupt companies are going to sell that Bitcoin too, to get the dollars to pay their debt, whatever the debt they have that they can't meet by their mining operations, maybe pay off their investors, etc. So that is a sell pressure. And I don't think that's going to occur. I think the rise in the price is going to more than compensate the miners. And this extra money will just be held, allowing people to hold more of the Bitcoin that they mine. All right, that's it. Next story here for mining is Ethereum's censorship problem is getting worse. And I think this is also an archive link from CoinDesk. This isn't a Bitcoin mining story, but it does highlight the difference between proof of work and proof of stake. So quoting from this article, a turning point came last year when the US government sanctioned Tornado Cash, a privacy mixing algorithm, a program on Ethereum that helped people transact without leaving a trace. The Treasury Department's Office of OFAC said the program was used by terrorists and other U.S. sanctioned entities. So it added Tornado's Ethereum-based computer code to the list, to the same blacklist as Iran, North Korea, and Hamas. In response, some blockchain advocates were defiant. They balked at OFAC's attempt at censorship and gloated that Ethereum would be immune as a result of its decentralized construction. It hasn't really worked out that way. Oh, man. Meth heads, right? About 72% of data blocks posted to MEV Boost, middleware that powers most of all the validators that write blocks to Ethereum, are now considered censored, up from about 25% in November of 2022, based on research from Tony so-and-so, a researcher at the Ethereum Foundation. Okay, this is interesting because maybe back in 2022, I don't know, I responded to Eric Voorhees, and because someone was saying like Bitcoin or Ethereum is being censored. They can censor you. And he goes, oh yeah, show me where it's being censored. Because he probably thought, you can't show something that doesn't exist, right? You can't prove a negative. And I just went and looked up this at the MEV Boost site, and it shows you how many blocks are being censored. And let's do that right now, actually. MEV Boost. What? I cannot find it here. MEV. Oh, there it is. MEV Watch. So let's share this tab. And this says only 33% is enforcing. Interesting. But I just shared a screenshot of this website with Eric Voorhees and said, look, a lot of transactions are a lot of blocks are enforcing this censorship. But the article from CoinDesk said it was 72. So let's get back into this. This can't happen with Bitcoin because it stems from the complicated structure of Ethereum. Validators or block producers in proof of stake learned to front run the trades on DeFi and other attached activity to Ethereum through maximum extractable value, MEV, block construction. 90% of validators on Ethereum outsource their block production to MEV builders. MEV insights were then shared with everyone via Flashbots. So now everyone can use MEV through these different Flashbots. And data transmission became very centralized to MEV players, creating a very centralized choke point for regulators to force censorship. So the complexity, remember, this goes back, oh my God, guys, this goes back before my podcast. Who did I hear this from? Was it Andreas? I don't think it was Andreas. Oh, I think it was Brian Sovereign. He had a podcast called Sovereign Tech, and I listened to that many years ago. And his big tagline for Ethereum was that complexity is the enemy of security. And that's probably some well-known phrase by some academic or something, but complexity is the enemy of security. And that is what happened to Ethereum. They made it too complex. They went to proof of stake, which is complexity on top of complexity. And after that, now this MEV is making it even more complex. And then what happens? Well, that complexity made you vulnerable to the government. And they can enforce the censorship. Complexity is the enemy of security. That's why Bitcoin is so small. Why the large blockers and all this stuff are wrong. you want to keep the base layer extremely simple. The higher layers, lightning, liquid, all that stuff can be as complex as you want. But the base layer must be simple so you can create security, so you can have reliable security. Ethereum cannot, period. It's over. It's a dead chain. All right. That's it for my Ethereum talk today. So difficulty, very slight decrease in difficulty this week after 6 upward adjustments, some quite large. This was a minor decline. There is not much, that was a typo. There's not much information to draw from this other than perhaps some evidence that the price rally is losing a little momentum. So let's take a look at this chart. You can see right here, we dipped down just slightly, just under 1% on a difficulty. Okay, hash rate. Hash rate peaked at or around November 25th. Since then, it has only been slightly lower in a typical heartbeat pattern. So we can take a look at this. You know, the trend is obvious. You can just take probably a 7-day moving average, and it's almost perfectly flat because there is this heartbeat to Bitcoin and to the hash rate. So it's down a little bit, but nothing really significant at all to report on hash rate or difficulty. Okay, what about the mempool? That's a little bit different. So mempool rose again this week to another high. However, the network is able to confirm most of the high fee transactions. Fees did rise slightly, but not by much considering the state of the mempool. With price cooling down here a little, the mempool might also. So let's take a look at this. You can see that, I don't know if it's clear. Maybe it's more clear here. Back in May, you can see this rainbow up on top. And we had that. Let me just go to the website. Dude, just go to the website, man. All right. So if you look on the tooltip when I'm going through this, so right back here in May, there's all of this rainbow right up at the top. So those are really high fee transactions. Fees probably got to $20, $50, something like that back there in May. Same thing here in mid-November. We had a big rainbow on top, and the same thing back here on December 6th. We had a rainbow on top. But now that kind of dense packing of high fee transactions is not present. So the network is working through all of those high fee transactions and probably going to start chewing through some of these other fees or some of these other transactions. So that's what I mean here. So if we go to the actual fees, they're estimating now up to 114 sats per virtual byte, and that comes out to $6.55. So even a little bit higher than what I was looking at earlier. However, the low priority fee is still down here under $5. So you can see that the network is able to keep up with the urgent transactions that need to be confirmed right away, and it will start chewing through some of those lower fee transactions. Okay, let's go back to the report. So that's what I have to say about mempool. Okay, let's go on to layer 2. In this section, I talk about Lightning, if there's a big Lightning update, or I still like Liquid. I'm still on the Liquid side of the house more than the Lightning side of the house, because I don't think I talked about this when we were live, but I did talk about it with the Telegram guys before in the pre-show on Telegram. So I envision a use case for Liquid. And it's going to be because they're not Liquid specifically, but side chains. Because governments are going to want to have some control. So they can have a side chain. And that side chain can be compatible with other side chains. So you peg in Bitcoin, you have a side chain for Brazil, you have a side chain for the US, you have a side chain for China, whatever. And then those are compatible. You can send US BTC It'll be US BTC, not LBTC like Liquid. It'll be US BTC, and you can send that to BZ BTC sidechain, or South Africa's BTC, SA BTC, or DE BTC, RS BTC. And so these are all going to be sidechains that you can send these back and forth, and they'll be compatible with each other. So that's and the reason for that is because they're federated. They are less decentralized than Bitcoin, but they are more decentralized than a central point of failure. Okay. So the government could choose who they want to be for they want to be in the federation, who should have their fingers in the pot. They could even imagine this, guys. Imagine like a treaty in the future. And you sign a treaty with the US, and the US says, okay, I'll sign this treaty, but we need to be part of your federation of your sidechain. Something like that. Or all NATO members. You have this big international organization, not NATO, because that's probably going to die, but some future international organization. And they all are treaty members because they all sit on each other's federated sidechains. I mean, there's opportunities for something like that. Anyway, I can envision that kind of thing happening. But right now, I don't envision the same thing for Lightning. I just don't see that Lightning can catch on as much as I can see sidechains catching on. So anyways, layer 2 news. Could ordinals and inscription trading be a use case for Liquid? So Liquid, they found it difficult to attract transaction activity, and that's true. Okay, they only have probably, I don't know, I want to say maybe 200 to 500 transactions a day. Is that about right? Because they have much less than one transaction a minute, usually, before this story that I'm going to talk about. I think it was about maybe one transaction every 3 minutes. So whatever that comes out to for the total day, that's what went on Liquid for many years. So they found it difficult too. If you compare that to Lightning, Lightning has much more use right now, but Liquid has, I think, the potential. So let's read a little bit more. Usually only averaging about one transaction, other than the Coinbase transactions, every few minutes. However, just recently, it seems some people are starting to try it out as a way to trade ordinals. So this is from Isaiah, Bitcoin Isaiah. Ordinals saved Liquid. I mean, I think that's a little too early to say that, but he says this is the most activity seen in 5 years, and it's likely just beginning. And you can see this image. He has 8 transactions, 6 transactions. Let's go take a look at the live one. So this looks just like mempool.space, probably done by the same people. Is this a Blockstream thing? I don't know, but it's liquid.network. Okay. And you can see that there were a ton of transactions. Actually, you can't see it there because it's back down to one transaction. But if we go to the history here, oh, great. Now it's not even looking like there's any. Okay. There's some. Hold on. Gotta go. A difference between Liquid and Bitcoin 2 is it has a block time of 1 minute. Okay, here we're getting some. We're seeing some go here. So this was back at around noon. We were seeing 8, 5, 7, 6, 9, 11 transactions a minute, which is not much. I know that, but it's a lot more than one. And here, look at these, 18 at 12:18. I think that's PM Eastern time. 18 transactions in that block, 13 transactions, 14 transactions, 13. So these blocks are starting to get a little bit more action, baby. 12, 16, 10. Whoa, this one had 22. right before noon, 19. I mean, so as you can see, there's more activity going on with Liquid, and I guess people are saying they're trading ordinals there. So I don't know. Let's see what else I have to say on the newsletter. So I'm not super clear on how this would work, but I'm assuming the sats associated with the ordinal will be pegged into Liquid sidechains, or the Liquid sidechain, and the Liquid BTC version of that sat will trade. So if you guys don't know about sidechains, I'm no expert on this, but I was around when they launched. I was around when Adam Back actually came out on the podcast and was talking about his idea of sidechains and how a two-way peg would work. I was in Bitcoin at that time. I think it was early 2014. But okay, so the way this peg would work is, you send Bitcoin to a certain address, and the sidechain receives it at that address. It's locked, and then inside the sidechain, you get released the Liquid version of it. Okay, and then inside, when that Liquid version is inside of the sidechain, it has a lot of different properties. Liquid has confidential transactions. They have asset creation, just like any sort of smart contract platform. They have all sorts of other things. And in the future, different jurisdictions are going to have the different rules inside of their sidechains. They can do whatever they want. So maybe it is that Bitcoin that you send to the lock address is an ordinal or contains an ordinal of some sort. And when it gets to the LBTC is released inside the sidechain, then that can be traded as if it is still that ordinal. I don't know how they're going to keep that peg to the exact sat, but maybe there must be a way to do it. So as you can see, I'm not an expert, but I think that's what's going on here. It is an interesting concept, and we'll have to watch how this develops. Long term, I think Element sidechains, which Liquid is the premier example, will likely be quite popular. The future might be a web of interconnected sidechains and Lightning Network, all based on Bitcoin. Okay, and that's the end of the report. If you guys like this, share it with people you know that might also get value out of this. It is really, if you just read through it or skim through it, it's only going to take you 5 or 10 minutes, and you get all the news and important updates for Bitcoin for that week. So appreciate you guys subscribing, hanging out here. Let me check the comments. I'll go to YouTube first. We do have 12 guys watching. Woohoo! Thanks, guys. Go ahead and put a comment in if you have any questions. I'll check back in just a second. I'll check and see what the guys over on Telegram are talking about. Okay, Shane says Warren's bill is old news. Let me check this out. Okay, so September 15th is the date of this. Warren, Marshall, Manchin, and Graham expand coalition for bipartisan bill cracking down on Bitcoin's use in money laundering, drug trafficking, and sanctions evasion. But that's not the one that came out today, I don't think. Let me click on this other one and see if that is the case. So this one, actually, let me share this since I'm just looking. I'll bring this up, guys. Hold on just a second. And I'll take this one too. All right. So this is the one that Shane said is old news. And yes, that is old news, September 15th. I haven't read, compared any of the actual bill itself, but this one that people are talking about is dropped from December 11th. Warren expands coalition of banking committee support for bill cracking down on money laundering, drug trafficking, and sanctions evasion. 5 new senators join as co-sponsors. Okay, so yes, this is just 5 new co-sponsors joining, I guess. And there's probably some of the language was updated as well, because I don't think that they went as hard on the self-custody back in September as they're doing now. But yeah, okay, great. Thanks, Shane. Yeah, that is pretty much the same thing. What else we got here? Overton window. What did I say? Spag. I can't remember what I was talking about for that. Yeah, Overton window. That's what the Marxists try to do, is they try to open the Overton window, but there is the Hegelian dialectic has a specific terms for what they're trying to do, and I just can't remember it now off the top of my head. I'll have to look that up. Shane says he prefers to listen to live stream on YouTube. He can pause, listen. Yeah, I listen to everything at least 1.75, sometimes 2. Okay, let me check back with YouTube and see what people are saying. No comments there on YouTube. All right, guys. Well, thanks for hanging out. And I live stream Monday, Wednesday, Friday, except when there's something special going on. Like tomorrow is CPI day, so I will be live streaming at 8:30 a.m. Eastern time to watch the CPI stuff with you guys and react live to that. So anyway, thanks for joining me. See you next time.